All right. XFN, I got an alert for that. Today, iShares TSX Cap Financials ETF. And I did a podcast, I think, way back in March. And I had this entering a stage 4 or possible stage 4. But now time has moved on. A lot of candles have been added. And instead of getting higher highs on the monthly candle chart, we're starting to get lower lows. What are my breakout levels? Always set your... First thing you should do, pop up a monthly candle chart. Draw the lines in the sand. Monthly defined support, monthly defined resistance. And that's your playground. These are the limits of the schoolyard. That's where if you get out of there and you stay out, you're not going to get back in or have a hard time getting back in. And those measured moves. And after that, when you play on the smaller time frames, don't go against where the measured move is going. So right now we have the 12-month moving average going downwards. 1-2 months now under the 12-month moving average, starting to skew it downwards. We tested. We're testing right now this monthly defined breakdown line at the 34.83 level. Test, go up, go test some resistance, go back down. 12-month moving average, bring it price action back up. Let's go test that again. We're not able to get a close. Fast move down and then back to this area right here. Remember embryonic breakouts? We had that on stage 2s, but those early breakouts that are too early to play because you still need more weight. You need that pressure to start rolling over that 12-month moving average, price action to be below it. But they're still embryonic. They're the first warning signs, the first clues you're going to look at for the next direction. And you had it right here. That implied measured move from that top pattern right here. And then it reached a target in the same month, in the same candle. But it's telling you sometimes you can't play them on the monthly. Just the move's too fast. And where the monthly candle closes, you're not getting good risk to reward entry. But you'll still use it because after that, if you want to fine tune your entry, you go on smaller time frames on the weekly. And sometimes people that play the weekly, that's their higher time frame, and then they zoom in on the daily to get a fine point their entries. Top pattern, move, bring the price action to the target, to the swing rule, and after that, you're bouncing off that monthly defined support, and then back up to the breakdown line, which was support and alternate resistance, and then you're just gonna bounce around that, and usually you're gonna get a sideways move right here, close to that breakdown level, and the more you stay below that 12-month moving average, it's gonna start going downwards, starting to push you downwards. And if you're not able to go and even try to get a thrust above and maybe a wick, and then the sellers come in and they bring the price action back down, if you don't get that, then you just stay within that, and then you break down from here. A close below that 34.83 level, 35 level. Then you have a measure move that's bring you all the way down here to 31.30. Where does it bring you? I like the symmetry. This is the base, and that breakout here, that resistance now turns support. So you're going to exit at the beginning of where that support is going to start generate. So that is pretty cool right here. Oh, there's multiple levels. You're a little bit below it. You could actually adjust your target to exit right before you start hitting that congestion, just in case it really stops short here. And after that, here you're going to have support all the way down here to the natural support. And if ever you get there, and then you get more price action here, then you get a bigger pattern, and then after that, the implied measure move is going to be that bigger pattern. And you see, you never, you have to listen to the price action. What you think could be low, well, it could be even lower, guys. And you see that we're embryonic breakdown, bring the price action below 12-month moving average, bigger pattern, giving a target further down. And after that, you have a bigger pattern. And then you're going to see that the target's going to bring you down all the way back into this 2008 territory, guys. Very, very possible. Listen to the price action. But right now, all we know is that the 30-week moving average, the 12-month moving average is going downwards. And we're starting a stage 4 on the monthly, guys. That is a lot of down pressure. Okay, let's zoom in. What did I say? Was my 3480? Cool. So that's my monthly defined breakdown level, if I'm not mistaken. Let's go back. Yeah. 3480. Stage 2, getting close to the Ichimoku cloud. It's working its support, its magic, bring you back up. But the more you move sideways, the more it's thinning. Now the price action is below 30-week average. Below the Ichimoku cloud. Eee. Let's get some arrows in here. Underperforming the SPX. It's on the bounce back. Starting to not underperform the SPX as much. You're starting to actually catch up. But after that, price action went back down, and then you see the Mansfield Relative Strength Indicator bring it back down. What else do we have as signals? We have right here, even the weekly sideways pattern, consolidation pattern, close to that monthly defined breakdown line. We actually closed Friday. We closed below it. So that should have an implied measure move that's going to bring it down, and it's going to try to thrust through that monthly defined support. And after that, you're going to have to wait. You might have it go down and then go back before the end of the December, and then that's a push. So if you don't have a close below that 34.83 level on the monthly at the end of December, then you have to wait January, February until the market's really ready to close below that level and telling you that, okay, there's no more buyers or there's more sellers, and we've stayed a lot of time below that 12-month moving average, a lot of time below that 30 moving average, and then it's just the pressure's overwhelming, and down it goes. See, lower, that's the high, lower high, lower high, low, lower low, downtrend. If I do connect the dots, even here it's accelerating, downtrend right here. And if you can't see the 30-week average, if you can't see the Mansfield Relative Strength, it's red because you're in a downtrend. The price action is the 30-week average is declining. The price action is below 30-week average. You're underperforming the SPX. If you can't see it there, well, look at the highs. If you're making lower highs and lower lows, you're in a downtrend. And other warning signs, guys, a whole bunch. Red candles here, extreme red volume on those down days. Another one here, after small volume, contracting volume on that sideways move, the price action getting sucked back up. Then another red hard hit. So actually here, this would have been a good risk to reward entry right here. Here's the embryonic breakdown right here. So we're not going to play that one right now. You really want to wait to be below that 12-month moving average. You're still close to the Ichimoku cloud. Very embryonic stage here. 30-moving average is just starting to roll over. You could have anticipated. Yeah, it's borderline. But we know that it's okay. There's a breakdown. There's sometimes pullback when you start hitting some support. Price action went back up, close towards the 30-moving average. That's still declining because the price action is below, close to that previous support turn resistance. So that's going to help you protect your sell stop that you're going to put above. Man, that could have been a pretty good risk to reward entry right here. So you've tested the support right here. And after that, the next time, the more you test it, like hitting a window, can't break the first time, and then gets fragile and fragile, and then you get a chance to, next time it goes down, could be the time that it breaks down, guys. So that is pretty much a bona fide stage 4, guys. So if you want to wait, the only last piece of evidence I would look for is that monthly close below 3480. But other than that, if you wouldn't be looking at that higher trend, that breakdown or confirmed breakdown on the higher trend, then this has a lot of the ingredients for A++ short setup, guys. And you're very embryonic, very close to the it's just starting, guys, so there's no rush. Even if you waited for that to close down below 43.80, you could actually let the price go back down and then let it bounce back up, let the 30-week average catch up, and when it gets close back to this area here, then you could have entered right here. So that would be your next opportunity, guys. All right, man. Financials, stage 4. Timber. Thanks for watching, guys. Ciao.